is worrying the markets? Given that the sell-off has lasted us a good 6 months, do you sense that this downward spiral is going to continue for some more time to come?
Yeah, good morning. See, some of the concerns we've had in the past is about the rupee depreciation. The other one was about oil. The third one is about how the fiscal deficit will evolve for India. But moving forward, some of the concerns which can trouble the market and take it a bit down. I'm not saying a 9,000 fine, which many people have been talking about. My sense is around about 9,900, 10,000 is what we could see because of 2, 3 or 4 other emerging concerns which are now coming up. One is the midterm polls in the US. The second is the state polls in India. There is a bit of concern of what's going to happen in Madhya Pradesh, Chhattisgarh and Rajasthan. The other concern which is also coming up is about beyond now as to how the oil prices are going to head with Iran sanctions coming up in November. So my sense is this market will either be a range bound market for some time or might even trend lower. But looking at the long term prospects, I think India is still a good story with fundamentals beginning to show up in terms of improvement, especially the GDP numbers, though a bit down now. My sense is India is a good long term story for investments. So one is looking at the market for short term, not the right time to invest, but if one is looking at the market for a period beyond a year, good time to pick up some of the good stocks we mentioned in our report.
And I'll come to those stocks in greater detail, Ravi. But first, really, on the texture of the market. Start of the year, you had a big fall in mid and small caps, and we were all talking about this dichotomy and bipolar nature of the market. And now it's all falling in a synchronized manner, and you do believe that the market could have still some more downside left to it. Do you sense, though, that this could stall perhaps, and we could see that dichotomy coming back, maybe mid and small caps stall the fall, large caps fall a little more, or do you think it's all going to rebound at the same time?
My sense is there is still some froth left in mid caps. Actually, as you rightly pointed out, the premium of mid caps to large caps in the beginning of the year was almost about 70–80%. That's come down to virtually zero now. So there is a huge valuation comfort there in most of the mid cap stocks, but I sense that there's going to be a bit of a downside from even here on. But if one were to look at mid caps more closely, I think there are still some good pockets to invest. Quality mid-cap stocks and in sectors where the gap has dramatically reduced between large caps and mid-caps, I think those are the stocks one have to look at in the mid-cap space. Large caps, my sense is they should be coming back because most of what you will see moving forward is likely to happen in the mid-cap space. And as you see the market rise slightly trending up, I think the large caps will find more favor with the investors, at least for now. But as the concerns abate, I think the mid caps will come back.
And so if and when the mid caps do come back, where is it that you broadly are looking at the opportunity right now? Do you sense that soon enough, with perhaps this earnings report, conviction will be back in the markets? We've seen that, with the DII data when it comes to the equity mutual funds has still looked strong through the SIP route.
Yeah, one at a time. Talking about mid caps, the bets in the mid cap space is quality mid caps. Look for market leaders in the mid cap space, good for companies with consistent profitability over the last 5 years, which is what we mentioned in the report. Somebody who has a NOPAT margin which is consistent, have little debt, have free cash flows. If companies possess all these characteristics, they are the companies which have some moats in them, either in terms of leadership or in terms of good profit margins or in terms of good product lines or in terms of brands. So those are the mid caps one has to really seize the opportunity now because they are available dirt cheap. So not the overall mid-cap space as of now, but quality picks in the mid-cap space is what I suggest. Now looking at DIIs, as you rightly pointed out, the money has, there's been an exodus from the debt funds. I don't see much of that happening in the equity funds. The data, with the SIP data shows that there's been a marginal drop, but my sense it's only going to be temporary. Again, there are some headwinds though. For example, the fixed rates are going up today, fixed deposit rates are going up today. So there you could see some funds being parked. Gold is not attractive with the rupee depreciating so much. Real estate is only doing well in certain pockets. So my sense is there's no great concern of the money flowing out of DIIs. My sense is that if at all there is a concern, the concern will be why is it not going to be as much as what it was in the past.
Having said that, how did you analyze the RBI's commentary in the most recent policy report and policy statement and the market's reaction to it?
The market reacted primarily because the market thought they would primarily address the rupee depreciation and they will provide some solace to the NBFCs. But maintaining a status quo on the rates by keeping the inflation targets in mind, what has actually happened is that this has not gone well with the market. But what also it has meant was that at a time when all the emerging markets were hiking interest rates, to ensure that the gap between the US rate and their rates do not widen much, India was perhaps the only country where we kept the rates constant. As a consequence, what has happened is with more rate hikes in the offing in the US, my sense is there could be more of FI outflows from India. Now moving forward with rupee at the level it is today and crude at what it is today, my sense is the inflation rate should go up, and if they do go up, 2 rate hikes at least is imminent. Maybe 50 bips over two rate hikes is definitely a possibility for India. And that's what they've been saying, that they will be calibrated. My sense, they are looking out for the inflation data, and with inflation likely to increase in the next couple of months, 2 rate hikes are definitely possible.